full cost pricing. In this case, the supplier calculates the total cost of a product, adds a markup to produce profit, and the resulting figure is the selling price. To avoid this one sounding all theoretical, let's look at it from a practical angle. And in this case, I want you to assume that we are dealing with a small business that makes custom-made, chairs. So the first thing when it comes to figuring out how we are going to price these chairs is to find our total cost. And there are two things that are used to determine the total cost. So in this case, we're talking about fixed cost and variable cost. So total cost is fixed cost and variable cost. What is any of those? Okay. So fixed cost, this is the price, or this is the cost that doesn't change with the level of production. The more you produce, nothing. You still pay the same fixed cost. Something like rent. You produce 100 chairs, as long as you're in that particular room, you are going to pay the same amount of rent. Okay. I mean, if they increase the rent, it's just going to be a stepping cost, because it will just be this way and then it goes up and then it remains there, right? So that is fixed cost. It doesn't change with the level of production. And then you have variable cost, which will change with the level of production. The more you produce, the more you incur. So anyway, in this example, our fixed cost, let's assume our fixed costs are workshops rent. So in that case, we have $1,000 per month. Workers' salary, $2,000 per month. Equipment maintenance, $500 per month, which makes our total fixed cost to be $3,500 per month. Now, our variable cost, the ones that are going to change the level of production. In this case, so variable cost, we have wood for each chair, $50. Paint and materials per chair, $20. Labor cost, $30. So our total variable per chair is $100. Now, that is to make one chair. But then the question is, how many chairs are we making? Because we need to find our total variable cost. So this is total variable cost per chair. But then what about for all those chairs? So in this case, let's assume that you're making 100 chairs. Okay. Yeah. So in that case, the assumption, we are producing 100 chairs per month. Now, with that in mind, we need to determine again the total cost, and then we need to figure out our margin, add that to the total cost, and then break it down by the number of, or rather divide it by the number of chairs we are producing, and then we get our price per chair. Right. So the total fixed cost plus total variable cost in this case is going to be 3,500. Okay. That is the total fixed cost. And the variable cost, obviously 100 chairs times 100, which gives us 10,000, and making the total cost per month to be 3,500 plus 10,000, and that is 13,500. And so if that is the total cost, then we need to know total cost per chair, in which case we are going to take 13,500 divided by 100, and so we have 135. That is our total that is our cost per chair. Okay, each chair, it will cost us 135. Remember, total fixed cost plus total variable cost divided by the number of chairs we are making. So now let's assume that in this case our margin is 20%. Meaning what? For every chair we make, 20% of the cost incurred of making that chair, that should be our profit. That's the margin you're adding there. So we're not just going to take 20% and then add. You have to find what is 20% of 135, and then that number, we add it back to 135, and that becomes our selling price. Meaning what? Meaning, so if it is 20%, so we'll take 20 of 135, which will give us 27. So 27 in this case, that is what is going to be our margin. And then now we add that. So the full cost per chair, we take the 135, which is how much it's costing us to make a chair, and then we add our profit margin. Remember, 20% of 135, that is how much you're supposed to be making. We are saying that for every, again, repetition, for every chair we make, we want to make 20%. Okay, that's our profit margin. So if you are making, it's like saying for each of this pen, if it costs X to make pen, then 20% should come out of every pen. So in this case, we will take 135, 20% of that is 27. So we add, okay, 135 plus 27, and our price is 162. So that is the full cost, okay, pricing. Fixed cost plus variable cost plus margin. So you find the total fixed cost, find the total variable cost, divide by the units you're producing, get the margin of that, okay, the margin that you had come up with, which in this case was 20%, add that one to that one, and then now you have your selling price, full cost. Okay. If you have any question, obviously ask. If you like getting summarized notes, summarized, downloads, practice exercises, videos, and all those things, make sure you join my newsletter. Okay. Every week we do put out all those contents. For example, every Monday, the Money Monday, we talk about aspects relating to like increasing your income, business tips, and things of that nature. Every Wednesday, you get summarized notes and things of that nature. So link is provided. Make sure you sign up.